Hello guys, welcome back to my channel. This is Higher Life FXT. I am here to give you a mentorship lesson that is going to be beneficial for you. Today's lesson is going to help you be a very profitable trader because we are going to discuss on support and resistance. On the previous video I said I'm going to teach you the market analysis. I forgot to include support and resistance, but rather I mentioned the trend lines, the trend lines trading strategy, chart patterns, reversal patterns, and continuation patterns. And when I checked, I realized that I did not include a very important thing, which is support and resistance, or supply and demand. So today we are going to look at support and resistance. Guys, before we can go any far, before we can start our lesson, can you quickly hit that subscribe button? Can you quickly hit that subscribe button, like and share with your colleagues so that we may all benefit from this. Let this help the next person. So subscribe, like and share so that we all may be profitable traders. This is a free mentorship program, and if you are new in forex trading, I believe this is going to help you a lot. There are a lot of people out there who are charging hundreds of dollars just to teach the same things I'm teaching you. In my country, I have seen people who have gone to the extent of charging even 500, not 500, 5,000 pula, which is equivalent to 500 USD, equivalent or less, but somewhere there, 500 USD. So just to teach you all these things, I'm going to give them to you for free. You don't have to pay anything. I am happy to help you become a profitable trader. I think by now, guys, you have realized that the market is not moving as you can see. It is because today is a weekend. As you know, the market operates only on Mondays to Fridays. The market operates on Mondays to Fridays. So that is why there is no movement at all. It is the weekend. And we are going to make a quick analysis. Let me delete this lines. Support, guys, basically is a place at the bottom of the chart, or when the chart is going down, when the candlesticks are going down and they stop at a particular place and they cannot pass that place, we call that place a support area. As you can see, for instance, the market will moving downwards here up until this area, and the market could not break past this area here. So this area we tend to call it support. it becomes an area which we will call support, because the price bounces every time it comes here. You can see that even after that, a few days passed, it came back, bounced again, came back and bounced again for the third time. So we consider this area a support area. When we switch on to a bigger or higher time frame, we can see that indeed we are in an area of support. This red line here, I put it so that we may be able to see where the price was when we switch time frames. So I have switched to day 1 or 1 day time frame to see where we were or where price was during that day. So we have switched from 4 hours time frame to day 1 day time frame, 1 day candles, and we can see that we were here, the price was here. And looking back in the past, we can see that indeed it has also before been rejected in this area. Price was not able to break this area, or there was a hard difficulty to break past this area. Now, when it comes to resistance, resistance is when we are going up on an uptrend. When we are in an uptrend and we get in a place where price cannot pass a certain area, or it keeps bouncing from that area, we call it a resistance. As you can see here, our price was going up on an uptrend. It bounced here, couldn't break, as we have seen. We have already said it's a support. A support, guys, can turn from being a support to being a resistance. And a resistance can turn from being a resistance to being a support. This happens when price breaks past the zone. As you can see here, the support that I was giving the example with is not only a support, but before it became a support, it was a resistance. Price was coming from down here. It broke this area, which we call, at that time, we had to call it a resistance because it is at the top and the price is being rejected. Hence, we price broke past, and when price broke past and came up here, this area, this zone switched to be a support area because price now is above that level. You will hear a term 10 code support. 10 code support, meaning it has turned from being a resistance to being a support. So it comes, as you can see, price comes down from up to this area, which now is a 10 code support and is being rejected. Price bounces again to go up, comes back again to try to go past the 10 code support, but it is rejected and price resumes the upward trend up until it reaches another level of resistance. Remember, resistance, we see it at the top, we see it in an uptrend. When price is going up, we get to a place where we see a resistance, whereby price is not able to move past a certain area. and keeps bouncing every time it comes close to that area. As we can see, price came from the 10 code support here and moved up to form a new resistance up here. We know it is a resistance because it is rejected here. When we get to this area, price cannot break through, and hence it comes back down and tries to go back up again to break through, but still fails to break. Comes down again with this candle. After a couple days goes up, tries to break again and still fails. This is an area for strong resistance. This we can call it a resistance zone or a resistance area. Hence, guys, what is happening here is, as you can see, price bounced from resistance. Am I clear to everybody? Do you understand support and resistance? Price, when it is going up, we encounter a place that price cannot move through. That place, we call it a resistance. When we break past that place, it tends to be a support. So hence we call it 10 code support. And when we come to a place and fail to break past it, it remains a resistance. Like price failed here, it failed again here, it failed again for the third time here. It is a strong point or area of resistance. But when price is on a downtrend, moving down, and comes to an area where it cannot break or pass through, we call that area a support. As you can see in this area here, price was coming down and could not break past this level here. It failed to break, it has gone up, tried to come down again to test or to break, and failed once again and went back up. As you can see, even in the past day, Friday, it was rejected from this area. So guys, I believe you understand support and resistance. Just to add another major support area is here. When you trade, my fellow traders, you have to draw these support lines and resistance lines. The reason for this is to know or to see where price is most likely to reverse. I will switch from this day 1 time frame to 4 hours time frame so that we can see. As you can see, guys, this is a resistance, it is a support. Why is it support? Can you answer why it is a support? It is a support because right now price is above these lines that you can see. When price is above that line or that area, it is a support, or it acts as a support. But when price is below the area, we call that a resistance area. Do you get it? So it is important because it shows you where price is most likely going to bounce and reverse. So switching on to the 4 hours time frame, we can see that we drew these lines on a day 1 chart, and here on our 4 hours time frame we can see that there is a consolidation still whereby price came and now it is trading between these two lines, which are going to be support and resistance. Price is trading between these two lines. When it comes to the top one, it is rejected. When it comes to the bottom one, it bounces back up. When it comes to the top one, it is bouncing back to the bottom one, just like that. Do you see it? The importance of drawing these lines. It is important to draw these lines. It shows you where the price is most likely going to bounce and uh, reverse. Let's switch to 1 hour time frame. When we switch to 1 hour time frame, fellow traders, I want you to see that it is a lot of pips that you can gain through trading in the support or looking at the support and resistance rejection. Obviously, there are candles that you are supposed to look at that show you that there is a reversal that is going to happen. There are candles that communicate that there is a reversal that is going to happen, and the patterns that show you that indeed we are going to go into a reversal. So looking at this is the same chart. Now we are in 1 hour time frame. Price came, broke this area, and the same day it broke down below the support. It went back into the zone above the support zone. What is this? We call it a fake out. It is a fake out. Price is just coming, bouncing, and because many people will think it is a fake out, because many people will think price now is going down because it has broken support, but price when they place their sell orders, it doesn't go down but it keeps going up. It is a fake out to catch traders. It is a trap by the market makers, my friends. So looking at this area here, we are trading between a resistance and a support. No matter what time frame you are in, whether weekly, monthly, or 1 minute, we trade between support and resistance, or supply, demand and supply. All right, this is what supply, demand. The support is the demand you want to buy. The resistance is the supply you want to sell. So in this area, you are going to buy every time price is rejected in or near the support zone. And you are going to ride the trend up until price touches or is rejected near the resistance zone. Let us see how many pips if you entered in this area up until this area. It shows us that it is 209 pips in 1, 2, 3, 4 days. 209 pips. And with that you can make around how much is it? 20 pips is $2. 100 pips is $10. So you can make $20 trading with a minimum lot of 0.01 in 4 days. No stress. Riding the trend from this point to this point here. Then what you do is you look for a place to sell. When price is now rejected here at the resistance, you enter a sell, you supply, you sell, because price is now too expensive, it is now too high and cannot go above, or cannot be it cannot grow more, it has to go down. So we place our sell in this area when candlesticks like this one are giving us information. You will have to go and find a book on candlesticks or research on candlesticks so that you can see and learn about the different reversal candles. Like you can see here, this is an bearish engulfing candle. It is a sell signal. It is at a resistance, and then we get this candle. It is obviously a sell signal. Our stop loss is going to be above the resistance zone or the resistance line, and we are going to ride the trend until it comes near the support zone. And it took about 1, 2, 3, 4 days again to come and touch the support zone. And still the same thing that you do. It is very easy to trade the markets, but you have to be patient. So from here, you could have made traded from here to make $20 up to here. Okay, all right. So from here, you could have traded from here again, coming down here, making another $20, which means in 8 days you could have made $40 with only 2 trades using a minimum lot size of 0.01. It is easy. It requires you to be patient. It requires your mental capacity or capability to be strong. And you at this area where this candle is communicating a reversal at a support, these 2 candles that you see, this one we call it it is like a hammer, and this bullish engulfing. They are communicating a buy. You buy from here and you ride the trend up until we touch or we are close to the resistance area. You take your profits, you sell up until the trend is broken. It is as simple as that, guys. Trading support and resistance zones. You can even add another line here. Before we add this line, let me delete it. Before we add this line, when you trade between support and resistance, or when you are trading support and resistance areas, your stop loss is always supposed to be just above the resistance area and just below the support area. Why is that? Because once price breaks below, you don't want to remain in the market. Let me do this. Make it dotted. Once price breaks, you don't want to remain in the market because it means now price is going down. Do you get it? It means that now price is going down. So if price breaks, let your stop loss be just outside or below the support zone so that you are safe, so that you can cut losses. Because once we break from this area, the price will come down to this support area that it has caused, or that it has made below. This also turns into a support area. So if price breaks this area here, the next support, it is moving to the next support. or the next stop is the next support area. So it would move from here, you cut your losses on this dotted line, and price moves, bounces here. Do you see it? Just it is the same thing with the resistance. When you enter your trade here, you enter your sell, you place your stop loss here. Let me make it, turn it into a dotted line. You enter your stop loss, you place your stop loss there. Why? So that in case the price goes beyond or breaks this area, you can cut your losses here, just near or above the resistance line, and the price will rise to the next resistance area, which is here. Price will reach or will move to the next resistance area, which is here, which is here. This is the closest resistance area. So you cut your losses here and you find another trading opportunity on the next resistance area. Isn't it simple? It is simple, right? So I want to challenge you to begin practicing this thing. As easy as it is, in the following week, I want you to begin to draw, even today, begin to draw these lines on your chart. It is much better when you use higher time frames, like day one. Start with the daily time frame, so that you can draw the strongest points. When you are, the bigger the time frame, the stronger the support and resistance that you are going to see. The stronger the support and resistance area, the smaller the time frame, the weaker the support and resistance that you are going to find there. So it is always advisable. What I do is I analyze on a daily chart or daily time frame, and then I switch back to 4 hours time frame to add other ones. So after I do that, I switch to 1 hour time frame to find my entry. All right, how is that? I move to 1 hour to find my entry. Get in there, get out, get in there, get out. So it is as simple as that. So my people, I want you to begin practicing this. It is very important to draw these lines on your chart. It is important to draw these lines on your chart. I'm going to end this video here. I don't want to keep you for long. It is not necessary. This is support and resistance. I want you to begin practicing trading on the support area and at a resistance area. Try to trade just as I have been telling you. You find an area when price is now rejected or it reaches and it cannot break through, you sell here and you put your stop loss just above the area, and when price comes here, you take your profits and you look for a buying opportunity. And when it presents itself here, as we get a bullish engulfing candle, we enter our trade here, and we are going to exit here. Isn't it simple? It is simple, right? So we enter here, we take our profits here. All right. I want you to begin practicing this thing. The stop loss is below the support line. The stop loss for a buy is below the support line. The stop loss for a sell is above the resistance line. I wish you well, and I wish you success. May you make money trading support and resistance, supply and demand. All right, I'll see you in the next video. Remember to like, remember to subscribe, remember to share, remember to open an account using the links below on the video description. I'm High Life FXT. See you in the next one.